said, my name is Danny. I am the dental practice advisor at Adams Brown, and I am joined today by Jennifer Allen, who is a principal at the firm, but not only that, she is our healthcare team leader. So we're going to talk to you today about ways to optimize your dental practice, whether that is tax strategies, some growth tactics, and then also kind of review some buyer and seller tips and tricks, as well as some mishaps that we want to avoid. With that, I think that's outlined kind of our agenda for the day. I want to kick things over to Jennifer to get us started.
Perfect. Thanks, Danny. And we are going to talk about really looking at what is your overall business practice strategy. We don't want it to solely be decided because of taxes. While nobody wants to pay any more taxes than we have to, we really have to understand what your business goals are because they really set the tone not only for your tax decisions, but for the overall practice. So yes, the entity structure, whether you're buying a practice, whether you're starting up a practice, we want to look and make sure that your entity structure is correct for what your overall business goals are. If you are planning on being the sole owner, that is a different strategy than if you plan on immediately bringing in partners, growing a practice, looking at that. And so really understanding what your overall goals are. And it's not just a one-time first year setup that we set it up exactly that way and we're stuck with it. There are options to change your entity structure, but we want to make sure that it's not just a year by year we're changing our entity structure. That's not an easy process, but it's not too hard of a process, but we've got to make sure that we're doing it strategically. So you always want to look at, again, your long-term goals, try to understand what is your vision, what's your strategy for that so that your whole team knows what the goals are to help you and assist you through that so that you can be the proactive working through rather than, oops, by the way, I did this, and then asking your advisor, how do we fix it if that's not going to work through your goals and assist you through that. So um, just some breakout things of things to be talking about every year. And if we could go to the next slide here, uh, reoccurring discussions to have with your tax advisor, your business strategy advisor before year end. We always want to talk through what are your collection practices? What does it look like? How quickly are you getting cash in the door from the time the patient leaves your chair to how quickly that cash is hitting the bank account. Strategizing when you're purchasing your supplies, your equipment, at year end, a lot of times those are the conversations are, well, should I buy a bunch of supplies or do I need to buy any equipment to lower my tax bill? Sometimes it is, yes, get it in, get the deduction, time value of money, but sometimes it is a better strategy. Hey, we had some things go a little bit differently this year that makes it an anomaly. Let's push some of those deductions into next year. There are reasons, whether it's tax rates, whether it's, total overall income, strategies for why things should just be addressed every year. Looking at prepaying services. Are you rewarding your team? You want to do any, holiday bonuses at year end? Making sure that those charitable deductions, your HSA, your IRA deductions, you can do those before or after 529 contributions. You can do them after year end, the right state. But the key before year end is being organized. After year end, it's not that you're sunk and you're stuck with exactly what happened and you'll just have to deal with the ramifications. With the right advisor, with the right strategy, you can look at retirement contributions, making sure that you've got that pass-through entity tax deduction, which is the ability. A lot of us have started to do that in the last couple of years, which allow the state tax to be deducted by the business. So it brings down our federal tax. Again, minimizing those penalties by making sure that you're compliant, making sure that you're having a conversation with your tax advisor. Do I need to be scrambling to get my work papers and everything ready to the tax team so that they can file on time because I really need to file by March 15th or April 15th, those deadlines. Understanding, does the bank have a requirement? Do you need to file on time to renew your line of credit or your equipment loans if you've got to go get equipment loans. So having that conversation, really understanding, is an extension a problem for the bank? Most of the times it's not. So even if they say, hey, do you have your tax return? Sometimes if you could just have a conversation, no, we went on extension, here's a copy of my extension, that will satisfy most of the time the bank requirements of what they need. So really working through that on a reoccurring basis. This shouldn't just be one time a year we're having this conversation, or we have this conversation once and then we never talk about it again. So next, Danny's going to go into a couple different items for, how do we make sure to look at your schedule, optimize what it is, the KPIs that you should be looking at. So I'm going to let Danny take over the operationally focused piece of
Yeah.
our dental practices.
Okay, so I've got about 6 tactics we can use. And what I like about this and what I want to get across to is that this is for anyone, regardless of where you're at in your professional journey. So whether you are a new grad that's starting up a brand new practice or going through a practice transition, or whether you're looking at retiring a few years out, anyone should be able to use these to kind of optimize the efficiencies and the profitability of their practice. So first up, we've got strategic scheduling. This is one of my favorites because it's kind of all centered around goals. And now is a great time to talk about this because we're just a couple years or a couple of weeks into January. So if you haven't set goals for 2025, now is a great time to do so. What I want to see happen in a lot of practices is a little less stress and burnout. Um, those of you that have been in practice, you are probably very aware that the most stressful and crazy days in the office are unfortunately probably the least productive. You're just running around all day, and then you go to look at your day sheet at the end of the day, and your production is underwhelming. But all you and your team, you're all exhausted. The days that you've got 3 and 4 surface fillings back to back to back. Want to get you away from that and be a little bit more strategic about your days. Work smarter, not harder, right? So how are we going to do that? We've got to find 2 numbers first. The first is your annual goal. So what production do you want to hit this year? And I'm going to use some easy numbers for an example. So let's say I want to do 1 million in production this year. The next step is to then figure out how many days that you're going to work. Some of us are not great about looking at the full scope of the year and kind of planning for those vacations because simply taking your annual goal and dividing it by 12, we know there's going to be months that's going to be really hard because maybe you're out of the office for, some of us just took a 2-week break in December. So instead of doing it that way, look at your working days. Grab a 12-month calendar, block out any vacations that you have, any holidays, and don't forget to block out time for conferences. So then what you're left with then would be the number of working days that you have, okay? So you're going to take your annual goal, let's say in this case 1 million, and you're going to divide that by the number of working days. We'll say 180 for this year. And then that will give you a daily production number that would be your goal. So in this case, it'd be like just north of 5,500, I think. Once you've got that goal, about every practice management software I've looked at has a place to put that so that you and your team can see that that is your goal for the day. And not only that, but you can also see if you're scheduled to that goal. And remember, when you're looking at this, we're looking at net production. So make sure your software is set up in such a way that reflects that and you're not seeing gross production numbers. Okay, once you've got your daily goal, then you can create your perfect day schedule. So I've got an example to the right here. This particular client works out of, it's one doctor working out of two operatories. And so they chose to kind of put all of their production appointments in one column, and then have that second column be more of an assistant-driven column. So it's a bunch of crown seats or emergencies, things that generally your assistant should be able to take care of 90% of. Now, this is going to be different for everyone. It's going to depend on your goals. It's going to depend on what services you offer, and the number of teammates you have. If you're working with only one assistant, this might look a lot different. If you have three hygienists that you have to do checks on, it's going to look different. So figure out what's going to work for you based on that goal. If it's 5,500, ask yourself, how many crowns do I need to do this day? How many fillings? How many implants? And create that day for yourself. So, and again, just like with the actual financial goal, most software that I've seen have a way to create a template for you. So it's kind of a transparent template that'll sit on your appointment book so that when your team is scheduling, it's very easy for them to know, okay, Sally needs a crown. Where should I put her? Well, we've got this template, makes it very simple. Okay. And then you're gonna have to train your team on those expectations. You can go over scripting on how to get patients to schedule where you want them to, and kind of control that schedule. So certainly takes some work, but this can be kind of one step to get you scheduling a bit more efficiently. All right, key performance indicators. These can be super overwhelming. There are like hundreds of KPIs that you can track. Um, so if you're not used to this, if you're not tracking any, I think the best place to start is just the ones that are going to have the biggest impact on your practice. So I've got those listed here. Of course, your net production, I've already said that a few times, but tracking your net production, the practice as a whole, and then maybe broken down by clinician. So by each dentist and by each hygienist, if you're a general dental practice. In addition to that, of course, we need to look at collections because it doesn't really matter what we're producing if we're not collecting it. So your collection percentage should it be 99% or higher. Now, I will say that that's going to fluctuate over time. You may not see that on a day after day, but when you look at the end of your month and especially at the end of the year, we're aiming for 99% or higher on that. So if we are, I mean, if you think about, even just 2% being at 97% and you look at, let's say $1 million in production, that's still a fair amount of money that you're missing out on. So even just a percentage or two is really important. Getting a little bit more detailed with the collections is your accounts receivable. This is going to have a huge impact on your cash flow in the office, so certainly something that we want to keep an eye on. Now, in a lot of what I talk about, like I've said, is going to be general dentistry, your typical one doctor practice. So these numbers may vary a little bit, but good rule of thumb for accounts receivable is to have out in patient and insurance revenue about 1 month of average production. So if you tend to produce about 100,000 in net production per month, that's a pretty good AR number to have. It may be more, it really kind of depends on the services that you're offering and how insurance heavy you are, but good rule of thumb, about 1 month of average production. Breaking that down just a little bit further, if we're looking at your 60-day and over accounts, that number should be about 5% of your total AR. So if your total AR is 100,000, your 60-day and over should be no more than 5,000. You'll see a lot of stuff online and maybe hear other people say that that is your 90-day and above. I feel like the way that technology has helped us be more efficient by sending out, texts and emails and allowing patients to pay online, we're really getting that down to a 60-day number. You don't have to wait anymore to just send statements once a month. You can send those as patients accrue balances. Okay, and then case acceptance. This can be a little tricky to track. Every software does it, but they all do it differently and they all measure it differently. So you might need to learn a little bit about how your software does it, what it considers to be accepted treatment, but there is a way to do that. And it's a good way for you to find out, if your schedule is not full, if your restorative schedule is only filled for the next 2 or 3 days, what's going on? Are we not diagnosing enough dentistry? Or are our patients just not scheduling? So do we maybe have a patient education problem we need to address? Next up, hygiene reappointment rate. Of course, everybody needs to leave with their next appointment scheduled. So whether that is preventative for sure, but also potentially restorative appointments. And again, if this rate is low, it should be about 96% or above. If it's low, dig into why. It could be that your clinicians are running behind, so they're not scheduling in the back. And when they go to do the handoff with the front office, everybody's on the phone and the patient doesn't want to wait. And so they just say they'll call later. And we all know what happens is they just slip through the cracks. So find out if you do find yourself with a low reappointment rate on your recare, do a little digging and find out what's going on. And then lastly, we've got periodontal percentage. As a hygienist, certainly one of my favorites. Good rule of thumb, again, is to have about 33% of your patients be periodontal patients. Now, that will also vary. There's always an exception to the rule, right? If you have a very young patient base, yours might be lower. And the opposite is also true. But at least use that 33% as a ballpark and meet, if you find that you are significantly lower than that, it might be time to just have a meeting with your hygienist. Make sure you're all on the same page with how you diagnose periodontal disease and find out if there are any issues with maybe your schedule is so full they just can't get anybody back for scaling and root planing. Maybe that's the issue. So at least address it and make sure everyone is still on the same page. Okay, well, even with just those six, that can still feel really overwhelming. But just know that your software is going to track this for you. So it's a matter of pulling reports. There's also other software out there that can give you a dashboard into these numbers and a lot more. And it's also something that we do as part of our advisory service. So if you're wanting to get into tracking more KPIs and would like some help, we can certainly facilitate that. On the next slide, I've got one of my favorite quotes about measuring KPIs. So this is all great, and just you starting to track this, I can pretty much promise you that you're going to see these numbers get better. But if you also get your team involved and get them maybe reporting numbers to you, maybe the hygiene team reports their periodontal percentages to you every month, or their downtime or things like that. You're going to get them more involved and a little bit more buy-in if you are asking for their support and asking for ideas and brainstorming ways to make these things better. So get your team involved in these things, get everybody excited about it. It doesn't have to be just another thing that gets added to everybody's list at the end of the day. All right, and go to the next slide. All right, online presence. It's 2025. We have to have a website. Well, I mean, love it or hate it, we got to have a website. There's a couple reasons for this. Of course, the most obvious, patients have to be able to find you. I don't know about you guys, but when I am looking for a new service like an electrician, I'm Googling people. And if I don't see you listed, obviously I'm not going to call. So get a website. And even if people know who you are, but they can't find you, they may think that you closed or you sold to someone. So have a website. If you are not in the position to spend, tens of thousands of dollars, because I know they're expensive, you don't have to. There are some local companies I know of here in Wichita that can do these at a very affordable price. Just get something out there so that patients can find you. And the same is true of social media, very much like the KPIs. I know it's overwhelming. I'm a millennial. I don't love social media, but just pick one platform. Maybe you've got somebody on your team that loves social media and wants to take this over. Find out what platform they are comfortable with, or decide as a team, hey, this is where we think our audience hangs out. They love Instagram or they love Facebook or TikTok or all the other ones I don't even know about. But pick one and post consistently. Don't post and disappear for a few months because that's also confusing to potential patients, but post once a week. You don't have to do anything really crazy. There are third-party companies that can handle this for you. And then lastly, managing your online reputation. So I challenge you to Google yourself in your practice and see what you find. Make sure that information is up to date, correct hours and address and name and phone number, all of that. Make sure it's correct and make sure that you have control over those profiles. You may find a random Yelp profile that you actually have no idea how to access. So take some time, get control over those profiles and make updates as needed. And then of course, respond to reviews. So whether they're positive or negative, make sure every review gets a response, while of course keeping in mind HIPAA compliance. So like I said, when I started this, This is not just for your patients. I honestly think that maybe an even better reason to do this is just to attract a really good team. When people are looking for jobs, you want to be able to be found, and you want to make your office attractive to new team members, and then even eventually to associate dentists that you want to come in, or even potential buyers. So lots of reasons to have a presence online. All right, fees. This is something that gets missed a lot. And I think that it gets missed because we're so used to, well, our fees don't matter because insurance tells us what to charge. I get that, I do. But it's really important to update your fees annually, because insurance will never pay more if you are not submitting higher fees. And not only that, but then when you do go to try to negotiate with the carriers that will negotiate with you, if they see that you're in a really low percentile on your fees, you're not going to have much wiggle room to increase your contracted rates. So do this once a year. There are three ways to do it. The most detailed option is by using the NDAS fee analysis. It allows you to plug in your zip code, and so then it will compare your fees with those in your zip code. And I think it gives you a range from like the 25th or 30th percentile all the way up to the 95th. So you can see how you compare. And then I would recommend putting yourself in the 80 to 85th percentile most of the time. You could do this, the simplest way is by using COLA, the cost of living adjustment that Social Security puts out every year. Like this year, it was 2.5%. So you could simply go in and increase all of your fees by 2.5%. And then lastly, you could take a look at your costs. How have your lab and supply costs gone up over, probably up, that's an assumption, but how have they changed over the last year? And consider adjusting your fees by that percentage. So if you have not done this for a while, you might find that your fees are, that you need to make some significant changes. You might find that you're in the 40th or 30th percentile on some of your fees. You have a couple options as far as what to do. What I want you to keep in mind is thinking about flexible versus inflexible fees. Flexible fees are ones that your patients aren't probably seeing very often. And of course, we're talking mostly about your cash patients. So they're likely not getting a denture every year. So raising a denture fee is much easier than saying raising an inflexible one like a pro fee or an exam or an x-ray, where the minute you do it, the patient's going to notice. So if you've got some significant jumps to make, consider those numbers and then either make a plan to have conversations with patients or maybe raise those over the next 2 years. And then lastly, make sure to evaluate your membership plan fees. Those of you who are doing in-office membership plans, if you're raising fees, make sure you reevaluate those as well. If you are using a third-party company to do that, all the ones that I have talked to, they will reevaluate your fees as you needed, just as part of the service that you're paying for. So reach out to them, and make sure you're still in line with what you should be charging each month. Okay, profit and loss. We wouldn't be a CPA if we didn't talk about your P&L. These are six really kind of areas to look at on your profit and loss, because I know that that thing is filled with tons of numbers. So if you just want to look at it without all the CPA knowledge in your head, these are just some areas that you can look at. Again, these here are based on general dentist, one doctor. We do have some other benchmarks if you're looking for specialist offices. But these are some good things to strive for. I will say on the first one on the team, probably seeing that trend up a little bit. I'd say 25% is a little bit more than norm in the last year or two, but these are a good place to start. Now, if you find that you are way out of line, the answer is not always to cut costs. It's a good thing to look at, but we can go a little bit deeper in this. Let's say, for example, your team expenses are much higher than they need to be. Well, let's compare that to what your team is doing. So your hygienists, let's look at their salary and let's look at their production. You know, are they producing 3 times their wage, or are they underproducing? So it may be that we actually just need to do a little more dentistry, not necessarily that we need to cut costs. Okay, and lastly, continuing your education. You all work really hard to have a successful business. And the last thing I want to see is at the end of that time when you're getting ready to sell is that you're not getting the value that you want. And Jennifer's going to talk a little bit more about that, but it's kind of heartbreaking and it's sad for the person that has spent 30 or 40 years building this beautiful practice. So always continue your education, continue to update your technology. The way you're doing things now isn't necessarily wrong, but the industry is always evolving. I mean, it wasn't really that long ago that CBCTs were not the norm. It was really cool if you found an office that had a 3D imaging. And now that's kind of standard of care. Most offices have that. And I think that we're going to see the same thing happen with artificial intelligence. We have clients with it now, and I think that's only going to get more over the next couple years. It's going to increase the standard of care when it comes to diagnosing, and it's also going to help greatly with patient education. That's the thing that I love about it. So certainly not replacing any jobs. Don't worry about that. But I do think it's going to elevate the standard of care that we have in the office. And kind of like what I said with the online presence, this is really also a way just to attract a good team and attract buyers to your location when you're ready to sell. Um, so yeah, keep up on all that. If you have any questions about those tactics, certainly pop them in the Q&A as Jesse said. But with that, I'll turn it back over to Jennifer.
Thanks, Danny. We're going to touch base here on immediately on selling a practice. How do I prepare? What do I do? Danny had kind of alluded to some of the conversations of, how do we make sure that we keep up our equipment, keep up the technology, don't slow down. So wanted to just go through, a little bit of just first year that you are starting to think, okay, maybe I want to get out of dentistry. Maybe it's retirement, maybe it's some other avenue. You want to go to you're tired of dentistry. We've heard the stories. People are retiring out of dentistry and going and doing other things with their education and their exposure of business. So the first thing is assemble your deal team. It doesn't mean that you're immediately, okay, I have to hire all these people, but you need to know who your advisors are so that you can start having the conversation. Again, we don't want to get to the point where, okay, I'm ready to sell. I need to sell in the next 6 months. You can absolutely get a sale done in 6 months. I'm not saying, but the better that you have planned for it and are working through, are my KPIs where they need to be? What do I need to be doing? And having that conversation with your deal team. And by your deal team, I mean, you know, having conversations with an attorney, a banker, your accountant, a wealth advisor, working through whether or not working with a broker makes sense for you, or whether your team of advisors have a group of somebody who would buy in. Maybe you've got an associate that you've already been working with and are ready to buy that practice. So really understanding who your team of advisors and how they can help you work through whatever that timeline looks like. One of the questions that we always ask are, who's your banker, who's your lawyer, who's your wealth advisor? Because we want to know who we can rely on to work with you to work through that. Whether you're buying or selling, we want to know who your team is. And working through how can we make the practice as attractive to a buyer. You may be selling to, somebody that has been in business for several years. They want to add another location. You may be selling to someone came straight out of school and they're really excited and they're gung ho and they're okay, let's go ahead and buy this practice. So how can we make sure that you are as attractive to them as all the hard work that you've put into building this practice? So the value gap potential. And by that, I mean, what is the number? Because we all have a number of what we feel like we need to retire and what the market is going to say. We need to understand that value. Is there a gap? Hopefully there's not a gap in the number that we know that, we feel like the value, the practice is worth versus what number we need to retire. Have we done our due diligence throughout the years of being a business owner to save enough to retirement? or are we looking to sell this practice and that is our retirement strategy? What does that look like? How can we set you up for success? Again, like Danny had said, making sure that you've got good equipment, that you've got good strategies, your team is designed and built to for this new owner to come in and feel comfortable with what they're purchasing, because they are purchasing your patient list, your team, and working through that. Is your business really ready to sell? Do you have clean financials? Because one of the scariest things to someone who's ready to sign on the dotted line, if they're getting a bank loan for buying a practice, is, well, are these financials really right? You can do all the due diligence in the world, but there's never a guarantee. As accountants, we can look at it and go, this doesn't smell right, but we can't guarantee that every single number in there makes sense. So really just trying to understand, what does clean financials, how can we answer questions, and even know the questions. There may be something there that, hey, this one year we took a dip in income. Having those answers and being ready to answer those questions before they come up is very helpful. Understand your story. Can you explain what happened? Is it, hey, one year we kind of slowed down, and that's why we took a little bit dip in our collections. Or, yeah, we had a little bit of a collections problem this year, but we fixed it. So look at, the next 2 years. And can we explain some trends, things like that. Errors, if there's too many questions or it take too long to get back on answering and things like that, that can shake a buyer's confidence in you, and in what the practice looks like. So we want to make sure that you're really ready to actually sell the practice. And then personally, are you ready to sell? If you've been doing this for 30, 40 years and you know what you do, you get up every morning, you walk into the practice and you sit down with your team and you have your morning huddle. What does that look like when that's not part of your daily life? Having conversations with your friends, with your family. What does that look like? Plan for that life after sale, because most of the time in the dental space, we are, not looking for too much of a long-term buyout. And so, maybe they'll want you to stick around 6 months, but it's probably not I'm going to sell to them and then get a job and get to work in the practice for the next 5 years. That just doesn't seem to be the trend. And that may be because the buyer is ready to take on the practice. It may be because the seller's really ready to just be done. And so, understanding that, understanding those pieces going into a sale. And that kind of flows into our non-negotiables. What do you want in the practice as you are working through your sale? What are your non-negotiables? Is it, I have to sell the real estate, I don't want to be a landlord? And so what is your non-negotiable? What is the most important? We all know that we want to get the most money possible, but is it timing of the sale? Do we need to, sell at a certain quarter? Do we want to, do we have a minimum price that doesn't matter if they can't meet this price? We aren't listening to, any further conversations. Is it, I want to work for the next year, so that I need that to be an employment contract in this, and that's a non-negotiable for me. What does that look like? But then also, if you are going to negotiate an employment contract, how are you going to be paid? What does that look like? What happens if there's not, a lot of business? You're probably the first one that they're saying, oh, don't come in on Thursday or Friday. The practice is closed on Friday, but we don't need you on Thursday either. And so just kind of working through, what is that? And you don't have to tell the buyer. Definitely, I would not recommend telling the buyer what your non-negotiable is, at least in the beginning, but let your deal team know what those non-negotiables are, so that as we're working through that process and working with you to negotiate, you understand what the consequences are. Because the whole process is a give and take. It is a negotiation. There's nothing, there's nothing that's, oh, well, it's just perfect. I don't think any attorney that has done any mergers or acquisitions would ever say, oh yeah, I sent the documents and there was zero changes on a process. So there's always adjustments to be made, but knowing what are the key things that are important to you. So when you're looking to buy a practice, whether it's a second location or starting up a practice and ready to, take on that practice, what do you look for? And so there's really 6 areas that we look at here. Yes, we want to know what the financials look like. We want to feel confident that they are producing what they are producing and it makes sense, the patient base. Do they have a ton of active clients in their patient base, but 50% of them haven't been seen in more than 6 months? Really understanding how many active patients are rebooking appointments and things like that. Because if they have 1,500 patients in there, but they've only seen 500 in the last 12 months, that doesn't matter. Or it does matter, but it definitely paints a different picture. So, um, understanding your team. Are they staffed correctly for the practice and the growth and your goals? Are you going to go in and say, oh, we really only need 1.5 hygienists. I need a part-time and a full-time person, but there's 3 on staff. I'm immediately going to have to make some cuts or I'm going to have to drastically increase our production. And so really understanding not only the number of people, their positions, their qualities, but understanding that office culture to understand, is it a high producing, high performing practice? Is it maybe a little more laid back? And if you have different goals and different timelines, is that going to be something that the team's going to jump on board with? Or are you going to kind of get talked about in the back room and things like that? Oh, can you believe he's making us do this or she's making us do that? We don't want that to be, but if that's the case, you need to know it ahead of time. So really understanding what that looks like. Location's important. We know that we've got to have a location, a good location that's convenient for our patients to come. It's easy and safe for our staff to get there. So understanding what that location, how many ops are there? What does that look like for your goals? Because if you plan to grow drastically, but you're going to sign into a 5-10 year lease, does that fit your long-term goal strategy? And so understanding your location, understanding what your lease looks like, as well as the equipment and your software. So really trying to understand, is there old equipment that I'm immediately going to have to call up one of the equipment providers and say, just give me a whole new practice. That's an expensive phone call if you're going to have to kind of gut the practice and just put all new equipment in there. But understanding what that looks like before you sign on that dotted line. The software, you may be used to one software, but if that practice is using a different software, who's going to make the change? Are you going to make the change or is the team going to make the change? If you're not both used and comfortable with the same practice management software, it's going to be a learning curve. So it's trying to figure out who's making that learning curve, what does that look like, and how can you at least minimize some of the pain points on that. So transaction mishaps, I've got both buyer and seller, but several of them are on both sides. So really trying to understand as a buyer, what is my personal financial position? Most of the times, if you're looking at financing a practice, you can get pretty close to 100% financing on a practice. But if you're buying real estate, you're going to need some cash for some down payments. And so understanding, are you in a personal financial position? What is the take home cash that you need to be able to operate your life? You've just gone through college, then you went to dental school, maybe you've gone on to a specialty. And so we're really ready to live life if you're coming straight out of school. What does that look like? Are you in the financial position to take this on? And working through what does the cash flow look like? Maybe you're buying a second location. Well, what's your break even? How much do you have to produce to be able to just break even on that second location, let alone make a profit? So making that employee and business owner mindset shift. There is a shift when you are an employee versus when you're ready to take that step to be the business owner. And, you're making the decisions. Every decision kind of comes back to you, whether you've delegated authority on pieces of it. At the end of the day, you're the one that's making that decision on how fast do we push on the gas pedal of growing this practice. Really kind of understanding what the value of the practice is and if there's any costs associated with the deal. Your deal team, they're working for you, they're working really hard for you, but they're not free. Unfortunately, some of those costs also can't be rolled in. So we've got to come to the table with a little bit of cash to be able to make sure that you've got the right team. Understanding what the financials are saying. So sitting down with whether it's you've got a mentor in the industry, whether it's working with an advisor. Hey, I'm not really understanding what these mean. Can you walk me through it? Most of the time, a an advisor who understands the industries would love to sit down and just walk you through. What do I pay attention to? What do I not pay attention to? This one's not really going to hurt you that much. So let's not focus on that piece of it versus, look, there's a lot of potential here. And so I think you can really grow this practice if you put some attention on this. Communication timing, it's both buyer and seller. What does that look like? Working through what makes sense for you, what makes sense for the seller, and understanding how quickly something can get done, as well as does it make sense to buy before the end of the year, or do we want to make it a January purchase type of deal? Adding your advisors too late, that's for both buyers and sellers. Having that conversation, you start to add there. You may have already gone down the path and had a conversation with the other party that you can't take back. And your advisor maybe would have told you, hey, don't quite have that conversation yet. So, and then not giving yourself enough time to set up the entity and getting yourself credentialed with the insurance, because you're going to have to get credentialed with your new entity structure set up, unless it's just a new location. But again, you're still going to have a conversation with whatever insurance companies that you are credentialing with. If you're not using insurance, working through what that looks like. Seller side, really what can trip up some of our transaction pieces is if you wait too long and then, okay, I'm ready, I need to sell, let's sell tomorrow. My spouse is ready for us to be taking longer trips of vacations and things like that. If we slow down a little bit too early before we're ready to actually sell, that brings down our overall gross income, and that's going to impact the value of our purchase or of the sale. So understanding the tax impact. If you sell it, we've got to pay some tax, but it doesn't mean that we have to pay all of it in the very first year if the strategy allows for that. So just trying to understand what it looks like on the tax perspective, what the timing of that looks like, and understand, the total number and working through that. Having any unrealistic expectations on value. We know you've worked hard. We want to get you the most money possible for that practice, but really understanding what the market says that your practice is worth. Financial disorganization, working through, hey, the messier your books are, the messier your records are, that you can't provide to the buyer timely, or the buyer's counsel timely, that's just going to delay the transaction. And changing those non-negotiables. If all of a sudden something wasn't super important to you, and then at the last minute, ooh, that's a deal breaker, I just have to walk away. Adding those too late can really, they can trip up or they can kill a deal. So, and looking at, I get this question all the time. Real estate, do I sell now, or do I buy now, or do I sell now or later? And my answer is different whether you're the buyer or the seller. So buyers, yes, buy it now. You're going to pay yourself rent. And so let's pay yourself the rent rather than someone else. Cost segregation studies, if you haven't heard of those, they are a way to accelerate the expensing of some of the cost. If you've done remodels, maybe you have to do a remodel, you can do a cost segregation study on it, but also if you purchase the building. And it's a timing difference, timing of the deduction, but really can be beneficial. Sellers, my answer is no, don't sell it at the same time. See if you can negotiate a long-term lease, because, and I call it mailbox money, you're getting a rent check every month. If you've negotiated a triple net lease and you're not having to pay for the real estate taxes or all of the utilities and things like that, we can make it so that you are paying very little of the expenses. Yes, if there's a new roof that needs put on, you're going to be responsible for that. But if you're not having to pay some of those every year expenses and things like that, you can negotiate that piece of it. But really the question is, how quickly are you going to outgrow the space if you're a buyer? If you're a buyer and maybe don't have some of the cash to save for down payment, giving yourself a 10-year lease with a first right of refusal at a shorter time period, that can be really beneficial. Or the last one here, do you have a better opportunity with a better return policy or return potential? So how can we have to ask those questions before my yes or no's are for sure, but those are just kind of general rules of thumb. So I'm going to go over the summary of just kind of key points, and then we'll see if we have any questions here for Jesse. But really, the tax strategy, we don't want tax strategy to be the only reason why you're making your business decisions. So having that conversation with all of your advisors and understanding what your goals are. You may not know what your long-term goals are, but your advisory team can help you build those. You may have, I want to see patients, and that's really all I've really thought about. Well, okay, let's sit down and have a conversation, work through those. Growth tactics. How can you work on and grow your practice no matter where you are at in your career? So, whether it's the scheduling, your KPIs, setting your goals, and monitoring it. Danny gave you a lot of tips about, key things to monitor. So KPIs, if you say KPIs and your team kind of glosses over, sit down with your team and walk through them. Give them some education. They're going to buy in a lot more if they understand that they're doing this to better themselves, to give them an opportunity. You can reward them better if the practice is doing better. It's not just so doc can make more money. I don't think very many people go into business with the sole purpose of, I'm going to pay my staff as low as possible, treat them as terrible as possible, and just make myself more money. That's not what most business owners have. So working through, buying and selling, understanding the financials, making sure that they're good and clean, understand what your negotiables are. The non-negotiables, buyers may have non-negotiables too. So understanding what those are and planning for the sale. So, all right, Jesse, do we have any questions?
We do. We have one.
Okay.
Um, Can you please tell dental insurance that CBCT is standard of care?
Yeah, we can tell them. I will tell them. So the answer is yes. I don't know if I'm gonna get anywhere, but the answer is yes. Yeah, I wish. I know that dental or equipment companies are like, it only takes so many scans for you to pay for this. And I'm like, well, not really, because probably we're writing it off just as a courtesy to the patient or yeah, so I will tell them though. The answer is yes.